Going on, so just going to go through another chart. So we're going to go through Aussie yen today, and yeah, essentially what I'm going to be looking at here is we're going to be looking at price action and seeing how we could have taken advantage of any trades during the most recent market conditions. So if we just isolate off this overall run, so if we just look at this run here, which essentially we can see within here that, you know, price did move to the upside, so we already know that price was moving to the upside. But the first question we need to be asking is, why did price move to the upside? So we go to the high time frames and we can see it on the monthly, and we can see that price overall had a value area up here, had a value area here where it near missed it, did have a sharp sell-off which it tapped into, sold off, left a gap to the low, and then eventually came up to the upside. So when you are looking at that little bit of price action that we boxed off, you can see it's actually very, very small in comparison to the overall picture. However, this is the sort of price action that we are dealing with in our most recent time, and the same methodology and thought process is applied throughout the whole chart anyway. It's where you are right now, which sometimes can, for newer traders, have a bit of emotions to it, because you have this level of uncertainty. You don't know where the market's going, if it is definitely going to be going up. But also when you do look left and you see that price has just been running, you anticipate and think to yourself with a level of expectation that price is going to continue in that direction in the same way, but it doesn't. So when we go to the weekly, what we can see over here is that we can mark on this value area which was tapped in here, and then that's our establishing point to see how price reacted. Now, a good key question to ask yourself is obviously, how did price get there? And what we can see that price actually squeezed into that area. Even if you were to crop through that wick, you can still see that price was squeezing into this area. And when price eventually tapped into it, we did have a strong rejection away. So at that point there, we can then start thinking about, well, if price is now responding to this level, we are seeing a level of volume kick in, momentum could start to come in. If we do start to get momentum, then we know that there's enough liquidity in the market now for the price to be pushing up higher. So then we go to the daily, and we can then just remove these off because we've now established from the higher time frame, which was the weekly and the monthly, where price tapped into, which was here. And then we want to now understand, how did price respond? So what we can then see is that when price tapped into it, there was like a mini double low, which you can see here on the daily, where it kind of just confirmed it, and then it had that strong push away. After that strong push away, that's really your confirmation that we are responding from this low in the way that we want to see that response. So for that reason, it doesn't mean that we just jump in the trade immediately. It means that, well, the higher time frame sentiment is looking like a reversal at this point, because we were supported by that larger structure squeezing into this area. But then more importantly, it's how we responded to the area. And then we had that. If I just flip the chart for a second, you can then see it here where price then sold or pushed up to the upside because we're inverted. And then we had continuation pushed, and then so forth. And this is something that I've been told as well, is sometimes it's a lot easier for you to read price action when you do see it for the shorts, if you've studied the shorts a lot more. Especially for myself, that I can read price action a lot better and a lot easier when it's inverted in comparison to when I'm looking at it on the bullish side. But either way, training the lens to see both is more important. We can then see on the 4 hour, if we start breaking down price action, and I think this is where a lot of people need to spend a lot more time on, is the 4 hour, because this is your weighted time frame. I mean, the daily, the weekly is also weighted, but the 4 hour is really and truly the place where it kind of borderline goes between execution and the final refinement time frame. So something that you should just kind of price in. So what we want to be looking at over here is, and if I just bring this over here, this drawing tool, we can see that price tapped into it once, failed to sell off, came back up, retested it with a mini double top. And then what happened was we sold off, we broke the low, we came back up, probably tested around about 50% of that range, and then we sold off again. So in a nutshell, we can see that price was just kind of shaking out people, building up liquidity for the bigger move to the downside, but we didn't know with certainty just yet. What did we want to see? We wanted to see a level of continuation, right? And what did we get here? Well, it's not the cleanest, but we did get it. And this is just something that you should bear in mind, that it can come in many different forms. So there was an entry over here, and also you could have probably got positioned in here as well. You could have got positioned on a reduced risk, it doesn't really matter. But again, we can see that there was an entry opportunity there. And why would this be suitable? Because we have that confirmation where price has pushed away. Again, I've explained this in multiple videos, and I think as we go on throughout these videos, you're going to get more and more familiarized with why these are good trading opportunities. And again, I haven't really dropped to the 15. I don't think I've even shown a 5-minute entry just yet. You know, the 15-minute and the 1 hour has a time and place. Even here, the 1 hour could potentially be used, but you can see already we don't need to go to the 1 hour. We can actually just stay on this time frame, and it's more than enough. So as we look at it over here, if you wanted to take it on the close, and let's just say we took it on the actual 4 hour close there, and I forgot my chart's inverted, give me a second. Take it over here, and we put the stops just above. I think I would probably go with just above here. I don't personally care too much about how large a stop loss is, unless it's very tight. Like, I don't want to be going 2, 3, 4 pips. I think sometimes when I'm not even looking at it, I have gone 6 pips and I've not realized. But again, I'm just trading what I see and where I can protect myself. And I think keeping that thought process is essentially what's really kept me in the game long enough. So again, we can see this trade, and then as the trade has then kind of followed through, tapped into that low, it's very close in terms of tapping you out for a break even there. But again, because we're playing the bigger move, I don't anticipate this turning into a larger flag. It's not common for this to then scoop and come all the way back up. And if it is, I'm happy to take that risk. So risk open, and then once we're running roughly around about down here, I think when it came back up to these areas here, this is where I'm running around about 0.1. It's possible for about 20 pips I could have been tagged out, depending on the time of day. It was around about New York session, so I think that would have been quite okay. But then over here, we had spreads could have widened, possibly tagged out for a break even, possibly survived it, who knows. But let's just say, for argument's sake, you know, we probably would have survived this. I think with 20 odd pips, with that 97 pips, could have opened up risk anyway, waited for that. So we'll move that to the side, and then we can look at the next trade, which was here. Sometimes as well, I'll be honest with you, when you are in a trade already, it's hard for you to see the second trade because you're already just focusing so much on the first one. And this has happened to me quite a lot of times actually, is where, because I've been in the trade already, I haven't been able to scale in because I've been too focused on the first trade. But then over time, I've built that understanding. So let's just say that we've got this point here, and then we basically got price squeezing into it, right? I think over here is a very sensible place where we could have been looking for a entry over there, and then we would have been tagged in. Oops, upside down, isn't it? Right here would have been tagged in, and then it would have just pulled back against me a little bit, and then that would have just been something that I would have accepted straight off the bat, and then followed through eventually, which is nice. So that was pretty good. And then we've got 2 trades running at this point. Now we can see obviously prices coming back and retesting over here. Prices then retested and then sold off. Again, we're on the 4 hour, so we can't really see and decipher a lot of this price action, but there's no trades there. We would be managing accordingly. We'd be managing into this low here. So then as we can see it to the left, we can see obviously there's a bit of price action below. But then I think as it gets to these areas, you're running about 5% on this trade, and you're running around about 3.7 on this one. You don't want to be leaving too much on the table. I would be a bit more loose on one trade, so I'd probably leave this one open around about 3%. And then this one, I'd probably be trading it around about 4.5. And then I'd just accept it as that. And then at the end, it would have come back and tagged you out, and you would have walked away with roughly around about 3 plus 4. Yeah, so you would have roughly walked around around 7.5%, give or take, and then that would have been the trade there alone. Now just remember, we are on the 4 hour, we haven't even looked at the other time frames, and you can already see that we've walked away with roughly 7.5%. But bear in mind, this trade shaped up around about 22nd of April and between the 14th of May. So you're looking at a whole month to make 7.5% on a trade at a scaling, despite the trades that you may have probably taken a loss on as well. So that's something that people don't take into consideration. But also, what they also don't take into consideration is the amount of time you would have had to wait, right? You might have seen the price up here. So you might have seen it on April the 9th, and then all the way up until April the 22nd, you would have not had the trade. So that as well in itself comes into a place where a lot of people don't realize that. And also, just to kind of point out, I'll just remove this for a second because it's just not necessary as much. But if I pull price back for a second, and I think, again, this is easy to see when you haven't done this enough, but it's easy to see how price played out. But if I just rein the chart back a second over here, right, at this point here, what would you be thinking? You'd be thinking, well, okay, let's see how price reacts. We've got this little bit of price action there, and then we've got a little hook point just above. Let's see how price responds, and then we play the candle, next candle, and so forth, and then boom. At this candle here, you could have potentially taken a loss. That's what a lot of people don't realize is between that, seeing those two trades where you're like, oh yeah, 7.5%, you could have actually taken a 1% loss at this point, which may have spiraled you into compromising or writing off the trade or many different things. So also kind of look at the aspect of that as well. If I just move the candle, so let's say you didn't take that candle and, price then gave you that second one there where, you had this pin bar and you're like, you know what, it's hovered around here long enough. I could take this trade. I'll put stops here and take it. Then what happens is price just probably pushes up against you, boom, tags you out, and then drops off, right? And then you took that unnecessary loss and you got the re-entry potentially, right? So just kind of bear those things in mind, because a lot of people, they don't consider that in the sense of they see 7.5%, oh, 8%, he made 10%, he showed this. But in all truth and honesty, there is losses in there, and you have to be honest with yourself and realize that if you were sitting there waiting, and on the Monday, the trade shaped up here, and you were thinking, oh, okay, and you took the loss, well then by Tuesday, would you have taken the re-entry? And would you have been sharp enough to understand, if you look at the time of day, this one was roughly around about 2 a.m. So for me, I wouldn't have taken it because I'd be asleep. But then looking at this one over here, which is at 2 p.m., I would have taken it. And that's being very honest, because it's New York session, so I know that as a trade idea, I would be sharp and I'd be awake at that time. And then I'd be looking at these sort of things. So wanted to just kind of bear those little points in mind. I think moving forward, we can already see that the price action has actually been pretty decent. There's obviously a lot of different little tweaks and things you're going to have to make along the journey, because I've realized as well that I don't really have an edge during Asia session. I don't really have an edge pre-swaps because I don't like holding overnight because I have to go to sleep, so then I can't really manage it as well. And I don't really have an edge when I just wake up, like I need to be in a flow state. So I know that the best times a day for me to be trading are when the volume's coming into the market, when liquidity is hitting from the bigger players, and they're taking advantage of where traders are being active, and that's prime time, open, New York and London. So I know that if I'm going to be trading prime time, London, New York, there's going to be some level of liquidity. Now I can guarantee almost every time these are going to be session opens. If I look at this time slot here, right around about this period here, we're falling into what, New York session right there. How interesting is that? New York session, we sold off, and then we started buying it back up straight after New York session. Up here, again, this is prime time London session. What happened? We pushed up London session, and then straight after we started moving. Obviously it went sideways, but then let's say where we had the level of commitment was probably around about here. Again, London session over here, New York session over here. Okay, that's after swaps, Asia session, and then London session open, and then we had the follow through. So again, it's one of those things where I think, you take your time out and you realize over time, I don't want to just be getting into the market. Because I'll be honest with you, a lot of the time, if this is you, then you should take this advice very, very consciously and just kind of really let it sink in. Is if you take a trade, let's say, and you obviously we can't anticipate all the time, but let's say you take a trade in here, for example, price tapped into this area up here, and you took the trade here, okay, despite win or loss. But you took a trade there, and then price was just basically doing this for ages, okay? If you're somebody who's going to get emotional and feel very iffy about that, and you've entered in, let's say, you've entered in for the sell there, and price keeps swinging high, and your stop loss is there, and then it comes back down, hits your break even, then goes back up, and then hits your break even, and you're watching that because you don't have anything else to do with your time. Then you're going to come to the realization that you are not only an emotional trader because that price action is dictating how you feel, which is completely wrong, right? This should not dictate how you feel. You should be in control of how you feel. And if the markets are taking control, then the markets will take advantage of you. And you won't make much money because you'll feel FOMO when the market's trying to make you feel FOMO because they control you. So that's straight up manipulation. The interesting part is they're manipulating you at that point. So you're not taking advantage of the manipulation. You understand it, but you're getting taken advantage of. And then basically, just in a nutshell, how to avoid that is you need to just walk away from the charts and reset. So perhaps maybe even just turn it off and just go for a long walk, leave your phone and tablet, whatever at home, and just go and then go to clear your mind, go sit somewhere, go be present, and then come back later fresh. But anyway, let's talk about this. So you're sitting in this price action. You have to understand that this is going to be a part of the game, right? Remember, we're on the 4 hour, so we could have been in here for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 40 hours. 2 days, roughly. You're in there for 2 days in this corrective price action, and you're trying to go short, and it looks like it could be going long. At that point there, you're going to be really, really kind of beating yourself up, and then in those 2 days, you're going to be seeing loads of other trades play out on other charts. Something to kind of bear in mind as well, that again, look how many days we were in this correction and this correction, right? That was like at least 3-4 days, 3 days, 2 days, 2-3 days. So for that reason alone, it's like sometimes you have to come to the realization that if you want to make money, you're going to make the money by being patient, because even though you got in the trade here and the trade committed, it came back up, you were still in that area where price was going up and down, up and down. Then it followed through, and then it committed, and you were so happy. Then it tapped into this area, and then it came all the way back up. You probably took a break even if you held it. If you were smart and you were aggressive, you probably would have taken some level of profit there. But again, it's not the best trade in the world because it didn't really give you the full commitment, and then eventually it just didn't go. So what the real main point here is, what I'm trying to say is that you are in control of how you feel, you're in control of the decisions you make, and you're in control of the choices that dictate your decisions. So at the end of the day, what you have to come to realization with is the systematical process is what's going to help you. Price is tapped in here, you've got a strong candle, you've set your entry here, you've put stop loss above, you've left it, and you've let it play. What have I done? I've played the 4 hour. So I've decided to play the 4 hour here. I've taken the candle here. Forgot we're still inverted. Took the candle here, put the stop loss just above. I wanted to cover the wick. It's fine, right? And then I left it. And over time, I'm playing the bottom of this range, or even 90%, but let's say the bottom of the range, I've got about a 3-1. And that's the trade that I'm playing. I'm just playing that as a 3-1. And how long would that have taken? That would have been from around about May the 26th all the way up until July the 7th. So again, it's that's a long time to be in a trade to make 3%. So then you have to kind of ask yourself, we didn't know it was going to take that long. In a different situation, that could have just dropped off and been very, very fast moving, but it didn't take that long it took very long to get there. So again, something to come to a realization with is you can't control the outcome of what price is going to do. But at the end of the day, I did walk away with 3%. It just took an extremely long time to get there. But then you go down to the levels of refinement, and I will just pull that up here on the 1 hour. And then you can just see close to that. Now that we're on the 1 hour, you can actually probably read through a lot of this price action, and you can probably make some more money. So for example, price came here, we had this bit of a squeeze, it then dropped off, didn't really give us the best entry in this area, dropped off, another squeeze, sold off, and then tapped into the low value area, pushed up aggressively, no entries, but then we had this, there was an entry in there to go long, another entry in there, we then tapped into the value area, we then took out all of that liquidity, 4 hour strong push back in, we then scooped up, bit of a V shape, sold off, didn't quite get the commitment that we needed because we wanted to see continuation down there. We then eventually came up, took out this liquidity, came up, squeezed, we're still within all of this mess, which we just don't know what it's going to develop into at this point. Then squeezes, comes back up sharp, taps into that level there, push down, continuation, not the cleanest, and then we're just in this area here where you could have just made sense of nothing really. And I think, again, sometimes you're just not really going to get good trades, and that's okay. It's completely okay, because you know you're not going to keep a pair on watch because of the possibility that it could give you something great, but at the same time sometimes we do put on pairs that we don't get good trades on. Anyway, I wanted to make this video quite short and easy. There wasn't a lot on Aussie yen, to be honest, but as we go through the other yen pairs, I'm sure there's going to be some smashing trades. I look forward to catching you all in the next video, so take care. Don't forget to hit that like and subscribe button, and if you have any questions or comments or anything you want to ask, feel free to drop a comment below.